Good afternoon, ladies and gentlemen. Welcome back to Young Money Investing. My name, of course, is Liam, and this is my weekly technical analysis. Now, really quick, if you appreciate this, if you appreciate my weekly analysis and the content that I'm bringing you, go down, hit that subscribe button, smash that like button, show me just a little bit of love and appreciation. And with that being said, let's jump into the charts. Now we are starting off on a daily time frame for the DXY, looking at the US dollar as a currency. You can see we have moved back up into this green supply zone that I have drawn out here. Not really too much movement. We had a nice move up the beginning of February, kind of a little bit of consolidation, and then a smaller move up into this supply zone. So where's it going to go from here? I really couldn't tell you. One thing to note is looking at the RSI here. The RSI is looking a little bit extended, just a little bit. Going back, like I said, from the beginning of February, I had a very, very sharp move up. Not quite into the overbought level yet, but kind of toying around with it, so something to keep an eye on. If we do move up into the top of the channel, we do of course have this pink line, the 200-day moving average above us. I would expect price action to get slapped back down. Perhaps we get a retest of this supply zone, perhaps we get a retest of the bottom or one of our other moving averages before it was to continue higher. Of course, the alternative is it breaks down completely, moves back down into this resistance at 101.62, and perhaps even further than that. Now let's go ahead and jump into our first index. We are going to start off looking at the Russell 2000, some small cap stocks. If you saw my short earlier this previous week, I have opened up a position. Really like the setup here. Move through this long-term resistance line at 1923, came back down, had this nice doji candle here, did not get the close above, really strong movement off of that, and then just a little bit of consolidation since then. But you can see we are riding our 20-day moving average up. I do think we're going to see a very strong move further in an upwards direction, moving upwards like this. I do think that we will see that move quite soon. I want to say this week. My position is currently up about somewhere between 8 and 10%. I am looking to take profits somewhere between 50 and 100%. But other than that, not really too much to report. Riding our 20-day moving average up, still have the 50 and the 200 below us. If price action was to break down, I would like to see support step in around 1833. Kind of a nice little price action going on back over here and acting in confluence with our 200-day moving average. But obviously I have a position open. I want to see this move up somewhere back into the $2,050, $2,100 range. Let's go ahead and jump into the NASDAQ. NASDAQ has broken out of our descending triangle. We are kind of in a downward sloping channel right now, which is actually a good thing, as downward sloping channels typically do break to the upside. So what I am kind of looking at, you can see we have this line right here drawn out at 12,175. Price action is hovering just a little above that, about 175 points above that. Did get a close, or I guess we are currently trading below our 20-day moving average. I would like to see price action come back down to this support line, also acting in confluence with the bottom of our channel, and then I want to see a breakout to the upside. If it's going to keep going lower, the first level that I'd like to see would be this 200-day moving average. Below that we have the 50, and below that we also have the downward trend line from our triangle. We haven't really retested that yet. We might need to see a retest before we get that large move up, but a lot of this is going to be dependent on what the dollar does. So we'll jump over into the Dow Jones. Dow Jones looking a little bit like the Russell, in all honesty. Pretty much sideways action since the end of December. The Dow has not really gone anywhere, pretty much just sideways. that's really all there is to it. We have broken the 20, finding a little bit of support on the 50, and of course this green supply zone. I would like to see a break above this resistance line at 34,345, then a retest, and then a move back up in a bullish direction. If it breaks down, I'd like to see support come in along this 20-day moving average, but I think sooner or later we are going to have to see a move one way or the other. Now, let's jump in to the trade of the week. Ladies and gentlemen, the trade of the week this week is Tekla Mining. Ticker symbol is HL. As you can see, I already have some lines drawn out. This is a Fibonacci retracement. I have not really used Fibonacci's all that much. I just never really found value in them. I am kind of changing my tune on that a little bit. So you can see going back to September of 2022, towards the end of September, we started this large movement up, peaking out on January 26th. Since then, and by the way, that is where my Fibonacci retracement is drawn out, we have seen a 50% retracement. If you zoom in, we had a large breakdown, a nice little doji candle, and then a bullish engulfing candle going back up. Ladies and gentlemen, I think this is a fantastic buying opportunity. I think you have some really solid risk to reward. Even if we go ahead and remove our Fibonacci just briefly, you can see that right about this area, price action has set its own level of support, which we have respected. Ladies and gentlemen, I think this is a great opportunity to go up. You have some really fantastic risk to reward, moving all the way back up to the top and then keeping this just about right about there, right below our 200-day moving average. I don't want to see price action go too much lower. If it did violate this supply level, I would consider this trade invalidated. We got in too early. It's better to get out and wait for a better entry. I do think this is a good level to buy. We'll put this back on here. And you can see that kind of acts in confluence with our 0.618. So if you wanted to set it just about right there, you can see we have about 2-to-1 risk reward ratio. I would say you can buy this all the way up to about $5.35, which would be the 0.382 retracement. So anything within this zone, I would say, is a good place to entry, and then you're going to be looking to exit at about $6.50. If you want a second take profit, we have a large movement starting from back here in April of 2022. You can see just a complete breakdown. That also acts in confluence at about $7.30 with the negative 0.25 retracement of the Fibonacci, which is generally what I understand to be the best secondary take profit. So buy right now, buy all the way up to about $5.35, looking to sell at $6.50 for your first take profit, $7.28 for your second take profit, and the stop will go in at about $4.60. That's it from me. Thank you guys so much for watching. I appreciate each and every one of you. If you appreciate me, please go down, hit that subscribe button, smash that like button. I want this channel to blow up this year, so let's make it happen. Once again, thank you so much for watching, and peace out, homies.